In this video, I'm revealing my SPY range rider strategy, a systematic approach with simple rules that trades the SPY, the SPDR S&P 500 ETF, that's delivered a 390% return over 2 decades with remarkably smooth performance even through major market crashes. Stay tuned because I'm sharing the exact entry and exit criteria rules with zero guesswork in a systematic strategy with a more than 87% win rate. It trades SPY on a daily time frame and only takes long positions. The idea is to capture breakouts above a historical range and be disciplined about cutting losses. I've put together a comprehensive strategy guide you can download completely free from the link on the screen or in the description. Okay, before we get started, we have the disclaimer. This content is for educational and entertainment purposes only and should not be considered financial, legal, or investment advice. We do not offer recommendations, solicit actions, or account for individual financial situations. Now, before we look at the rules, let's check out the backtest results. We tested this strategy from January 2004 to January 2025, over 20 years of data. Here are the key statistics. We have a total return of 3.9x, which is a 390% return over 21 years. We have an annual rate of return of 7.8%, and the recent performance over the last 5 years has improved with an annualized rate of return of 12.4%. The strategy has a Sharpe ratio of 0.83, which indicates decent risk-adjusted returns. This strategy has experienced a maximum drawdown of 15.1% and a MAR ratio, which is the annual rate of return divided by the maximum drawdown of 0.52, which is decent. It has an average exposure of 58%, which means the strategy isn't always fully invested. This strategy has an exposure adjusted return of 13.5%, which is above the long-term buy and hold return of about 10%. There are a total of 95 trades over this period, which is about 5 trades a year. This strategy has an expectancy of 1.74%, which is the average expected value per trade, which is very healthy. It has a profit factor of 3.7, a high win rate of 87.4%, an average win of 2.9%, an average loss of 6.3%, and an average win length of 31 trading days, and an average loss length of 42 trading days. This is the equity curve of the strategy. You notice that the strategy is flattish during major bearish markets such as the global financial crisis in 2008 to 2009 and the market correction in 2022 to 2023, but otherwise is generally on a fairly smooth upward slope. This table presents the yearly and monthly percentage returns along with total annual returns and maximum drawdowns. Here are the key takeaways. We have the highest annual return of 30.3% in 2013, followed by 24.2% in 2021 and 22.8% in 2024. This strategy experienced its worst annual return of minus 9% in 2022, followed by minus 5.9% in 2007 and minus 2.7% in 2005. 17 out of the 21 completed years had positive returns, with a 0% return in 2018. The best month for this strategy was a 10.8% return in November of 2020, and the worst was a 10% loss in May of 2010. This strategy experienced a maximum drawdown of 15.1%, which is the largest peak to trough loss, which happened in 2023. Now, here are the entry rules. To enter a trade, we see if we currently have a position in the SPY. If not, we place a daily buy stop order at the highest closing price of the past 95 days. Next, we need to know when to exit. Here's how we manage risk and take profits. We have a take profit at the entry price plus 3 times the 14-day average true range, and we have a stop loss at the lowest closing price of the past 95 days. For a realistic backtest, we included transaction costs, which includes a commission of either $1 or 0.5 cents per share, whichever is higher, and a slippage of 1 tick for stop orders. The SPY is a very liquid ETF with a close to $30 billion average daily traded value, so we should be experiencing minimal slippage. These transaction cost assumptions help ensure our results are closer to what you experience in live trading. Let me walk you through some example trades so you can see how this strategy works in historical market conditions. So anytime we are not in a position, we place a stop entry order at the highest close of the past 95 days. In this case, due to a strong market rally, the stop is triggered and the price fluctuates between the take profit level and stop loss level until one is triggered. In this case, it's a take profit that's triggered with a return of about 4%. This example trade shows a loss, where instead of triggering the take profit, the stop loss was triggered with a loss of minus 6.46%. The win rate for this strategy is 87%, so this only happens about 13% of the time. So what's next? We're moving into forward testing, tracking live market performance to see how this strategy holds up. We'll be updating the performance of this strategy on a monthly basis. If you want to follow along, make sure to subscribe. Now, here's where things get really interesting. While a 7.8% return might not sound revolutionary, this strategy is designed as a building block in a much larger system. When combined with other low correlation strategies we'll be revealing in upcoming videos, we're targeting double the annual returns of the S&P 500 with less than half the maximum drawdown, and a smoother equity curve that lets you sleep well at night. This is just one piece of what I call the Holy Grail portfolio, a collection of strategies that work together to deliver what individual approaches cannot. If you found this video valuable and want to follow along, do these three things right now. Download the complete strategy guide using the link in the description below. Subscribe and hit the notification bell to catch our new strategy reviews and monthly performance updates. And share your thoughts in the comments below. I personally read and respond to everyone. For those who want to go deeper, I'm sharing more exclusive strategies through my newsletter at grailwealth.com, and you can connect with me directly on X at grailwealth. See you in the next video where we will review the next strategy in our Holy Grail portfolio. Until then, happy trading!